Ever pondered whether pennies can truly morph into billions? This story unfolds like a fairy tale about a trader who turned his modest investment into a mind-boggling $11 billion. Did this trader really find a way to make billions that's as easy as pie? Or is it all just a slice of good fortune? What were the key factors that made it easy for him to both make money and bounce back after losing $80 million? How did this exceptional trader accumulate billions? And what were the astounding strategies he used to achieve that billion-dollar success? David Tepper, a broke math-savvy student, was desperate looking for a way to pay for his education. He ventured into trading in the late 1970s, a time when options were still relatively new. Desperate times called for desperate measures, and he discovered a lucrative pattern. The values of certain options displayed delayed movements compared to their underlying equities. This lag offered a great chance for arbitrage. By taking advantage of this trend, Tepper was able to maintain a consistent income that comfortably covered the cost of his graduate studies. David Tepper is currently one of the highest-paid hedge fund managers in the world, placing him among the elite. He has consistently delivered annualized returns of 25% on average, proving that slow and steady wins the race in the world of finance. But little did Tepper know what a huge financial empire he would build. Tepper was aware that success wouldn't be a stroll in the park, so he committed himself to academic achievement. He finished college in 3 years while juggling the weight of part-time jobs, much like a master juggler skillfully handling a cascade of challenges. After earning an MBA from Carnegie Mellon, he joined the Treasury Department at Republic Steel. There, he encountered the emerging junk bond market, opening the door for him to trade these high-yield bonds. His skill in trading junk bonds helped him get a job at Goldman Sachs, where he significantly contributed to the firm's financial success. However, Tepper's true skills shone during bear markets. How did David Tepper manage to make substantial profits during the 1987 market crash, when most investors were facing significant losses? He stood out because he saw the crash coming and positioned his entire portfolio short, making substantial profits. He decided to start trading aggressively on his own, even though the competitive culture at Goldman Sachs did not favor him. Leveraging his connections, Tepper raised $57 million to launch his own hedge fund, Appaloosa, in 1993. Soon after starting his fund, new opportunities began to emerge, as if he had opened Pandora's box of financial success. So, was success now within easy reach, with victory just a stone's throw away? Early in the 1990s, in the midst of the Latin American financial crisis, David Tepper bought a number of Argentine bank bonds. In 1995, this strategic move resulted in substantial gains, with his fund growing to an impressive $450 million. By 1996, his wise investments had increased the value of the fund to an astounding $800 million. Tepper made significant bets on assets that were cheap and regularly produced fantastic returns. He had no idea that his greatest financial challenge was just around the corner. In the midst of all his success, has he ever faced challenges? Yes, he also